For decades, there's been a simple rule that investors live by. When things are calm in the world, oil gets cheaper. It's the classic peace dividend. But what if that rule is completely broken? We're about to explore a massive structural shift in the global economy, a great decoupling in commodities that's setting a trap for a lot of people, but creating a huge opportunity for others. Yeah, see, the market is still looking for that peace dividend at the gas pump. But this tells us the real story is happening somewhere else entirely. The battleground has shifted. It's moved away from traditional energy and towards the very building blocks of our electrified future. The game hasn't just changed, it's being played on a completely different field now.
So to really get where we're going, we first have to understand where we've been. Let's break down the old rules of the game and see why geopolitical conflict has always been so tightly, so directly linked to the price of oil.
At the very heart of this old playbook is a simple concept: the supply shock. Historically, wars, conflicts, political instability, they all act as major supply shocks. And these aren't just minor hiccups. We're talking about events that can abruptly choke off the supply of essential stuff, sending prices through the roof simply because it's harder to get. And for decades, the poster child for this whole phenomenon has been crude oil. A perfect, and I mean perfect example of this is the Strait of Hormuz. Just look at this narrow waterway. It is literally the jugular vein of the global oil market. Any conflict that involves Iran immediately sparks these massive fears that this choke point could be closed. And if that happens, you're cutting off a huge portion of the world's oil supply and sending the global economy into a tailspin. And to be really clear about the stakes here, 31%. 31% of all seaborne crude oil passes through this single strait every single day. That's why even the threat of a disruption here sends markets into a total panic. A closure, even a temporary one, would force this global scramble for other supplies and not just drives up the price for every single one of us. So this cycle, well, it became incredibly predictable for investors. First, a conflict erupts that threatens the supply, and boom, prices jump. Then, as things start to cool down and those fears ease up, the sense of relief just floods the market and prices fall. And that final drop, that is the peace dividend. It's the expected and, let's be honest, often profitable outcome when things de-escalate. But here is where the story takes a very, very sharp turn. A monumental structural shift is happening right now, and it all starts with an insatiable, almost unimaginable new demand for one single thing: electricity. We're not just talking about powering our homes and old-school factories anymore. I mean, the explosive growth of artificial intelligence is creating data centers the size of small cities. Large-scale crypto mining operations are consuming more electricity than entire countries. And then there's the broad electrification of our grid, electric vehicles, heat pumps. It's creating a baseline demand for power that is fundamentally different and just vastly larger than anything we have ever seen before. You want a crazy example? Just think about Microsoft's recent move to power its AI development with its own nuclear power plant. Just let that sink in for a second. A single company's AI dreams require so much energy that they are turning to nuclear power. This isn't just some minor increase in demand. It's a fundamental step change that our current infrastructure is just not ready for. And here's what makes this whole situation so different. Unlike other industries, the power grid has no substitute. It's not like you can just find another way to get power to a data center. No matter how that electricity is made, solar, wind, nuclear, whatever, someone has to transport it. This infrastructure is the non-negotiable, absolute backbone of this new economy. Now, at the exact same time as this demand is exploding, a second huge structural shift is happening. The very nature of global trade is changing. The era of smooth, easy, predictable supply chains, well, it's over. For decades, the global economy ran on this idea called comparative advantage. The theory that if countries just specialize in what they do best and then trade freely with each other, everybody wins with cheaper goods. Well, that system is breaking down. We are entering a world of trade wars and tariffs where national security and locking down strategic resources matter a whole lot more than pure economic efficiency. The consequences of this breakdown are stark. Take a look at gallium, a mineral that's absolutely essential for semiconductors. China produces a staggering 98% of the entire world's supply. That's not a supply chain, that's a strategic choke point. And in a world filled with geopolitical friction, that kind of concentration is a massive, massive vulnerability. And it's not just gallium. This concentration, it extends to a whole host of what we can call reconstruction metals. We're talking about the nickel, the lithium, the cobalt you need for batteries, and the rare earths that are essential for everything from military hardware to electric vehicles. In this new era, controlling these supply chains, well, that's a new form of geopolitical power.
So what happens when you combine this completely unprecedented new demand for electricity with a newly fragmented and frankly weaponized supply chain for all the metals you need to build it? You get a great decoupling. Two very, very different paths are emerging for commodities.
So let's break it down. On one side, you have traditional energy, like oil. It's facing a pretty subdued outlook, with some projections of a 10% price decline. You have constant political pressure to keep gas prices low, and profitability gets really squeezed below $60 a barrel. But on the other side, you have these electrification metals. They're now considered national security assets. Prices for these reconstruction metals are projected to rise by 15% or even more. Their supply chains are incredibly concentrated, and the demand for them is non-negotiable if we want to power this tech revolution.
I mean, the divergence is just so clear. Traditional energy is facing all these headwinds, while the metals and the infrastructure for our future have become critical strategic imperatives. You can see where the investment capital and the political focus are all shifting. It's all going in one direction.
So this new reality, it creates a really dangerous trap for anyone who's stuck in the old ways of thinking. But it also presents a massive opportunity for those who actually understand the shift that's taking place. And here's the brutal truth of it. Retail investors, they're conditioned by that old playbook. So they see a dip in oil prices and they think, aha, buying opportunity. They're trying to catch a falling knife, not realizing that the big money, and I mean the capital expenditure, or CapEx, the money companies spend on physical assets has permanently shifted. It's moving away from oil exploration and towards grid adequacy. This is the classic value trap. It looks cheap, sure, but it's cheap for a reason.
And this gets right to the heart of the opportunity. The real, non-discretionary spending, the money that absolutely has to be spent, is now focused on the grid. It's focused on the infrastructure you need to transport these unprecedented amounts of power to where they're needed for AI data centers, for EV charging, and for modern manufacturing. And what's even better, the utility companies that actually own this infrastructure, they're in a pretty enviable position. They operate in a regulated environment that basically guarantees them a return on the massive capital they have to invest to build out this new grid. In an uncertain world, that provides an incredibly stable and predictable foundation for growth. So let's just end with this question. That so-called peace dividend, it hasn't disappeared. It's simply moved. It's no longer about a few cents off a gallon of gas. It's about the colossal, multi-trillion-dollar battle to build the infrastructure of the 21st century. So while the crowd is distracted by the day-to-day ups and downs of crude oil, the real supply chain war has already started. And it's a war for copper, for lithium, for cobalt, and for the grid itself. The only question is, are you prepared for it?